Okay, let's just jump into this. I gotta re-record episode 2 and 3, but this time I've made sure the audio is working. Uh, I don't know if I have the energy for it though, so let's go. Oh yeah, I'm Zoomers React. They're Millennial Money. This is episode 2, the market crash. Top into it.
I know exactly where you are.
What's up, everyone? Welcome back to episode number 2 of Millennial Money. We got me, Kevin, Andre, Jeremy from Financial Education, Graham Stefan. What's up, everybody? The market crashed today. Let's talk.
It did. That was a wild ride. This morning when I woke up around like 7 o'clock, I always check my phone. That's the first thing I do. And when I saw the number, I was like almost in disbelief. Like, what happened? What did I miss this morning? So immediately I go to the website, see what's going on.
Is it like your portfolio that you checked?
Yeah.
Oh, wow. Yeah.
This was, I think actually this was the single biggest drop I've ever seen in a day in my portfolio. I think it was almost 100 grand.
Wow.
Which I know for you, Kevin, that's like an hour or two. But
I took my Bitcoin portfolio today, and I was like, "Oh my god!" It went down from like 720 to 600,000 ish. It's floating around.
oh yeah, I bought a little Bitcoin last night. It's like 1:30 in the morning, and it went down to like what was it, 45, something like that. And I put 10K in.
I'm gonna average into Ethereum. I need more Ethereum in my life.
Just you got, man, Andre, man, what's your Bitcoin? Did I ask you this last time? How much are you in crypto relative to everything else? I mean, based on the way you talk about it, it sounds like you're like big on Bitcoin.
Yeah, at least 50% more on crypto than dividends and stuff. Yeah,
that's crazy. What did you think this morning? Jeremy, feel free to jump in here as well. I got to know. I mean, Graham, you woke up at 7. You saw a big red arrow. Andre, you saw your crypto down. It's weird. I never look at my actual portfolio when I wake up because it's like in 4 or 5 different places. I just start scrolling down Webull and looking at the individual stocks, and I'm like, oh, damn, CCIV. Oh, damn, Tesla. Oh, damn, everything.
Enphase. Enphase was a massive like loser this morning, 150.
Yeah, like why? Absolute destruction, like crazy. Yeah. What did you think, Mr. Stock Guy Jeremy?
Yeah, dude, I was so mad because I just found out a few hours ago that I missed some tremendous deals in the market because I was sleeping, man. Yes. So I bought some stocks today, but I didn't get them. Like, for instance, I had no clue CRSR, Corsair Gaming, a new stock of mine, it hit 33 today. And I was buying at 37 after I woke up. I was like, oh, 37, that's a good deal. And then I saw I was at 33. I'm like, are you kidding me? You got to be flipping my flapjacks. And then another good example, TTCF, Tattooed Chef, was at $18 today. I'm like, I bought at 20. I'm like, I could have got it at 18. Are you kidding me?
It's so weird. It just like the numbers we saw. But what's so crazy about it is we saw the numbers. It was like a flash crash. I was live streaming during the market open, and the market opened. It's like, oh, okay, the market, it's down a lot. And then all of a sudden it's like, oh crap, it's going down. It's just like red candles. And I'll tell you, within 20 minutes, I think actually it was probably within like 13 minutes, we started seeing green, and building up. It was the craziest. It was like a Larry Kudlow V-shaped recovery. Like we're in a V. Oh, I guess that's too Donald Trumpy. But it was crazy how fast it like jumped back up. Like the appetite to buy stocks on sale is so high. I mean, it gave me some faith in the market that obviously people have a lot of money out there. But then on the flip side, I'm like, where the heck are people getting all this money from? What do you guys think?
What do you guys think happened to why did that happen? Was it something that the Fed said?
I think it was the 10-year Treasury. It's been going up. I think people are afraid of inflation, and that means rising interest rates, and that's going to kind of put a damper on the stock market. So I think it was just this accumulation of a sell-off that prompted other people to begin selling, other people to begin selling. Once people got note of this, like what I do is I look at my portfolio and I see what's down the most. And then I think to myself, do I want to add more to that? The answer is yes, I'll just buy more.
Jerome Powell's like, wait, guys, chill out. No, inflation's under
Yeah.
control. I swear. It's really soft right now.
And I think some of that may have been just speculation about him talking later today. And of course, if the market drops, he's going to be like, no, guys, it's fine. The money printer, it's still working. We got it running on overdrive. It's okay. And it literally, and then some of these stocks even closed positive for the day. Just right after he spoke, everyone started buying back in. It was nuts.
Well, one of the reasons Bitcoin went down is because of Janet Yellen and what's his face? Elon. Elon.
Yeah.
Elon's like, oh, I think it's expensive. It's like he just wants to buy more on the
Yellen, though. I don't know. I feel like a little bit with the cryptos. I kind of feel like she's pulling a boomer on us with the cryptos.
100%.
She hasn't wrapped her head around this yet because she said herself she knows that the Fed is working on their own stable coin. But I think they started working on a stable coin after she was the chairwoman. So she's never really been part of that. So she leaves the Fed, goes on the speaking circuit, you know, getting paid whatever, 20, 30 grand per talk event or whatever at Goldman Sachs or whatever they do. Now she's coming back in. First few weeks on the job, we're in a different world. She's getting asked about crypto. I think she has no effing clue. I mean, like, I'm sorry. Like, I think some of the stuff she says is right on point, but I think she's just clueless.
I feel like she says things she just figured out, and she's like, guys, Bitcoin is not efficient. It's not a good currency. And it's like, oh my God, where was this lady?
Buy things with it, guys.
Yeah, like she's just figuring it out. Like that was the narrative in 2017. Like, yeah, we know. Thanks, Janet. And then Elon's like, it's too expensive. And he buys it. All right, we're good now. It's not too expensive anymore.
That would be hilarious. Yeah. I want to know. So what's your, I know this argument is going around for years about Bitcoin's energy usage, for example. Andre, how do you dispute it though? I took one of my computers, Lauren, she's been feeling a little nauseated lately. She's going through these treatments. And so she hasn't been playing Rust with me. So I'm like, okay, fine. If you're not going to use your gaming computer, I'm going to mine Bitcoin with it. Well, now I go in the garage and it's a freaking sauna in there. And it usually isn't. Okay.
Right.
Like, come on, man. This stuff is firing on all cylinders. There's no way I'm mining like $3 a day. Okay.
Really? What kind of computer do you have? Is it like a super high end one?
No, like I got it for $900 on sale on Amazon.
Oh wow, okay. Because I mean, I know that people are using the ant miners to mine. I don't even remember like S13s now or whatever they're up to now. Yeah. But I didn't know you could still mine Bitcoin off of like the normal GPUs.
Yeah, I think it's like an AMD 1600 or something like that. It's totally just a joke, but I'll tell you, it's sucking power. I wouldn't be surprised if I net it out, especially if I run it during the day. I'm probably losing money because I'm probably paying like 35 cents a kilowatt hour during the day with all the ACs we're running. So it's probably a mistake. We'll see. But
well, apparently,
how do you fight that?
Apparently, 74% of I didn't know what percentage it was, so I had to just look it up. 74% of Bitcoin's energy comes from renewable resources. So that's kind of interesting.
That is interesting.
So I mean, it's not as much of a power suck as people think it is, I'm assuming.
Unless that energy could be going to something, it could be powering, houses, and now the houses are having to use gas instead. So it probably, I don't know, the jury's probably still out on that one a little bit.
So you're mining Bitcoin now, Kevin?
Well, I mean, I don't know what's going on now, but now I'm at a rate of only, I don't know why it went to euros, but I'm at a rate of €1.87 right now. It fluctuates all the time. It's so annoying.
Hey, that's why your internet was so bad last night on Clubhouse, and you kept breaking. You're trying to mine Bitcoin with the little computers, man.
dishing out the Bitcoin slams.
I still need to work on getting
no, you got me. Yeah, probably. That's all that hashing going on. I don't know though. Like, is Jerome, like, Graham? You kind of just hit on something. You're like, the market's bad. Jerome comes and says everything is fine. Do you think he adjusts based on what the market is doing, or do you think that's what he was going to say anyway?
Oh gosh, I mean, the probable answer is he's going to say that anyway. But I wouldn't be surprised at all if he's going in there and be like, "Oh, how is the market today? All right, I'm going to speak it right before the market closes." Let me tell everyone it's okay not to panic. It does seem like he's tailored what he's going to say around the current stock market just to ease people's concern. Because he did hit on every point that people were worried about: inflation, rising yields, and rising rates. And he hit on all the points that, like, don't worry, guys, we're going to keep rates low for quite some time until we meet our target.
But he didn't sound too confident, though, about the whole economy and the job sector. He's like, yeah, we've got still a long way to go.
I'm not confident.
So
I think that is a bullish sign that we have a long way to go, meaning the stock market's here right now. We got a long way to go.
It's interesting because I think it could be perceived both ways. So that way, if we do go down, it's like, I told you guys, we still had a long way to go. Be careful. And
it's just an excuse. It's just an excuse to keep rates really low. That's what it is at the end of the day. It's like, oh, we still got high unemployment. I've seen Yellen do the same thing. And then they're just, obviously keep rates low. So, and then this morning with the stocks dropping huge, I think it's just there's a lot of funds that have really tight stop losses on. And I think that's why we got such a fast sell-off so fast. And when you got that many stop losses and the market's going down that fast, it's triggering. And then it's like one leads to another, more selling. And then magically things recovered. I don't know how, but it did.
I think they hit a point where people just started buying in enough, where I think it may have triggered some people to take a close look at this. Like end phase would have been one where, had I seen that at like 155 and I missed it barely, I would have bought a significant amount of end phase back then. Missed it though. And then I saw it, and this is my fault for trying to time this one, but I have too much in end phase anyway. But
are you buying more Tesla, Jeremy?
Not at the moment, although I was asleep. I saw it hit 619 today. I would have been tempted to, but no, I didn't buy any today.
So for anybody who doesn't have exposure to Tesla like me and I want to buy some, do you recommend it at this point, or are you still cautioning people?
I feel like if you have a 10-year outlook, yes, but I feel like my personal feeling, like I could feel like Tesla could easily fall 20-30%. And you could still make an argument that the valuation's rich. So you really have to have a super long-term outlook, kind of like I do, where it's like, I'm holding that stock. I plan to not sell it for the next 5-10 years. If you got the outlook, I think there's definitely a possibility to make.
I think I see where Jeremy can make that evaluation, that even if it falls 30%, it's still pretty rich. And I might try to make a video on that.
Money there. I mean, there's people that think, truly believe that company's going.
Ooh, he said Tesla was down 617 and he might buy. Right now, I'm looking at Robinhood. Tesla's, today is March the 29th. And Tesla is at 609 and 59 cents.
Going to 5-10 trillion over time, with the autonomous taxi network. It's still hard for even me, to wrap my head around that. But, we'll see. It's amazed me so far.
Yeah. I've been reading the chat, Kevin. I think I just saw you respond to that. The Vlad's on Portnoy's. Like everyone wants to react to that. I don't know how you guys feel about that. It might be rehashing more of the same stuff, though.
I mean, I'm happy to pull it up. It's just, I'm kind of tired of hearing from Vlad right now. I don't know. What do you guys think?
Clear Value did one with Vlad.
Oh, okay.
Yeah, just read it. I don't think we're going to hear anything new. I mean, that's the thing. If we react to Vlad, it's going to be the same. There's nothing going to be revolutionary happening right now that we haven't already heard. So
right. So, okay, well, on Tesla, though. So, did any of you add to Tesla? I have to say, I bought some more. I may have seen my portfolio value plummet today, and at the same time, I may have increased my margin. So, at the same time, I may have taken my margin of safety down even narrower by burning the candle at both ends of the stick.
I can't do that. I can't buy more Tesla. I have too much in Tesla relative to every other stock, and like logically, I feel like I shouldn't be over concentrated in Tesla.
Is that the Kevin O'Leary in you?
No, it's just I don't want to place it all. I've seen how volatile Tesla has been, and I don't want to, why take the risk at that point? I'd rather just consistent, steady growth over 10 years than these huge swings up and down. But that's just my style. I don't have the risk tolerance that you do. Like I wouldn't pull a margin.
I saw your margin call. Was that real? You got margin called or?
Funny.
Oh no, I stole that screenshot from someone else. But it
was cute.
It's like I saw that and I just died laughing. Did you guys see that? Look at my Instagram story.
Oh yeah, it's fantastic. I loved it. That was one of the funniest I've seen in a while.
I love it. Yeah, no, I mean, like, I think honestly that would be like the worst is to ever get a margin call because it's like, damn it, now I have to sell something, you know,
Right.
and it's going to be a rough time that you're selling it in. So I want to always stay away from that. But yeah, I mean, look, Jeremy, you're talking about this 30% crash in potential Tesla stock. Why? Would you think this thing's going to go down to $400 again or something?
I don't, but it could. So
It really could.
yeah, let me be very clear. I wouldn't predict that, but I mean, I think it could. You know what I mean? Like you saw today, it fell to 619, and we haven't even really like had a true like bleeding of the market, right? I mean, that's not even like we haven't even had like a big down cycle for the market. Like if you imagine, like let's say hypothetically the market fell another 10-15%, Tesla's at $400. You know what I mean? Because Tesla's going to move down dramatically more in the market. Like the NASDAQ goes down 2%, Tesla goes down 6 to 8%, right? Sure. On the flip side, as the market goes up, you know, Tesla usually outperforms the market and does really good. So I wouldn't predict that it goes down or anything like that. But if it went down to 400, it wouldn't surprise me. I mean, look what happened when you know, the big crash happened. Look at how far that stock fell. I think it fell, I want to say 60% or so.
Yeah, but what catalyst? I mean, that was like world-ending panic that we had in the middle of March. I mean, are we going to get that again? I mean, who knows? But what do you think that can come again?
I fear people sell stocks at really bad prices. I've seen it time and time again, right? You know what I mean? Like it happens. There was people selling today, you know, whether it be funds or individual investors that were selling some, you know, stocks that I think were a deal and a half already. And we're going out there and selling today. Like Corsair Gaming, I think that stock's a deal. And people were selling it at 33 today, 34, 35. It's like,
hasn't that
day
stock,
traders
had
are
its
desperate
growth?
for anything.
I mean, isn't it possible that they've had their run? Okay, they had their jump from COVID gaming sales. You know, gaming's all the rage now. But
Barely getting
I mean,
started.
you know, isn't their growth just going to taper out here?
So you've offended Jeremy now. Watch out.
Yeah. You know, a gaming market is going to continue to grow for probably decades, right? Like, I mean, that market's not going to slow anytime soon. If anything, I see it accelerating. And, you know, I saw an interesting post the other day. It was talking about the $1,400 stimulus check coming, right? And it was talking about, you know, 90% of gamers make less than $100,000 a year. So the high majority of gamers are going to get that $1,400 stimulus check. Do we think a little bit of that money is going to funnel into Corsair Gaming, maybe a little extra than what is usually funneled in? Probably, I would say. And
I feel like 90% of all people.
Every gamer I hear talking about getting their stimulus check is also talking about upgrading their PC and getting new PC parts. That is their first plan when they get their stimulus check.
Make less than 100 grand though.
Yeah, that's right. Touche, okay? But that's not the point. Kevin, that's not the point. It's about gamers.
Okay.
True.
Okay. I agree. Yeah.
People play video games, though. I feel like 90% of people play video games.
Probably.
So it's like just across the board, it's 90%.
Hey.
What's your video game choice right now, Kevin? What are you playing?
I'm so deep on Rust, man. It's bad. It's the most toxic game ever. It's like the most like unappreciative game in the world. But I've been playing with like I just put a message out in Discord. I'm like, hey, who plays Rust? And ever since we've created this group of like, I don't know, 10 to 12 like really loyal people. And every time I log on, like yesterday I log on and they like 3x the size of our base, and they got like this ramp for us to drive a car out. It's like Rust is this post-apocalyptic shooter where you start naked with a rock, and then you have to like, you build a small house and bigger, and you go around shooting other people. It's a first-person shooter as a survival game, and it's really, really toxic. But lately, I've been just addicted to that at night. And then, you know, sometimes I'm up you know, Graham, you asked me about this. Sometimes I'm up and it's like, oh, crap, it's 1 a.m. I'm still playing Rust. What's the pre-market doing? Oh, crap, it's down. Let's go make a YouTube video.
Right. Yeah. So you just woke up and the market opened. You weren't like spidey tingly senses. You're like, wait, I need to make a video. The market's falling. I feel it.
Yeah, you know, sometimes that happens because sometimes I'll wake up in the middle of the night. It'd be like 4 a.m. and I'll scroll down Webull and just see like what's going on. And usually I fall back asleep. Like Saturdays and Sundays, I can't wake up because I scroll and like, oh crap, the market's closed. Like this morning, I went from like dead asleep, 4 hours of sleep to oh crap, like I was up instantly when I saw that market today. But none of you guys play really games, right?
No, not really. I need to get back into RuneScape.
Oh man.
Speaking of NFTs, Nifties, are you guys getting into that at all?
We got to talk about NFTs.
Yeah.
Do it.
So
Logan Paul.
NFTs.
Oh.
Speaking of NFTs and games, they should have been looking into the limited edition games. Those are actually valuable and similar to an NFT, except people see value in them who don't know what the hell an NFT is. Everyone knows what a limited edition game is and understands that that value is going to go up. Currently, limited edition game is the Super Mario 3D Collection. Nintendo is no longer selling it after March. They've only been selling it since about October, so they've only sold it for about 5 months, and then they're going to stop selling it forever. They're not going to make any more copies. Right now, you can still buy as many as you want until the end of the month.
Graham, did you see my NFT video with the Logan Paul clip?
I think I did. The one you made on it, right? The warning against NFTs.
Well, yeah, but the clip from like 3 years ago where Logan Paul told me to do voiceover. Yeah. I thought that was cool. But yeah, tell me, what do you guys think about this Logan Paul thing?
Well, he made $3 million in a day doing it, right? Issuing tokens. So I don't know. So they're only limited to digital assets, right? Is that correct for me to assume, or can it be anything really, technically?
You know what? We should explain because a lot of people are asking what an NFT is.
Yeah, like non-fungible tokens. They're basically tokens that are all unique. You can't divide them into any smaller pieces, so they're not divisible. And the reason they have.
Hold on, I need to go to the restroom, so I'm gonna take a little recording break. One moment. Okay, let's hop right back into this.
Have value is because they represent a digital asset that has some value that people want to buy. So, for example, collectibles market, right? Like we have physical Pokemon cards. I don't have my Pokemon cards on me, but like actual digital tokens that represent art. And so you have these digital artists that basically create what are essentially JPEGs or GIFs that people buy, which is crazy considering the fact that you could literally drag and drop it onto your desktop and you have what they spend tens of thousands of dollars on. And yet we have like this crazy market. There's this crypto kitty on the Ethereum blockchain. His name's Dragon, and that's like a $1.2 million crypto kitty. So like what people are buying are digital assets. And I guess the appeal is like bragging rights to people to say like, oh, the neon meme cat, like I own the rights to that. And so like it's this crazy market where we're going to have like companies maybe start creating their own like digital merchandise, or I mean, I don't even know where it's going to go, but
it's basically just think of digital artwork. It's artwork that is digital. You can store it somewhere, but it has your own unique code to it that belongs to you. Other people know you bought it and you own the rights to that digital art. And
I'm such a boomer because I'm like, I don't get it though. But like I'm one to talk because I spent like 25 grand on Pokemon cards.
You know, it reminds me, do you guys remember a long time ago when the iPhone App Store first came out, there was an app called I'm Rich, and it was $1,000, and it was just a diamond that showed on your phone.
No.
The point of that was that you were rich enough to buy a totally useless app that just shows a picture of a diamond.
That's fun.
It kind of reminds me a little bit of that. And I gotta say, I don't get. I looked it up on like some of these auctions online for NFTs.
Yeah.
Well, digital artwork for sale.
Yeah.
Some of them are just look like Microsoft Paint sketches that people upload, and then they just call it 1 Ethereum to buy that. And
I thought the same thing about crypto kitties when they came out. That was over a year ago, like 2 years ago. I didn't get it, and they still hold their value, and they're increasing in value. Like I don't.
But is this? is this all just potentially a sign that there's so much effing money in the system right now that people are clueless about where to put their money? So it's like, do I want to sit down and do a fundamental analysis on the future cash flow of Square? Or do I want to buy some, digital art that looks cool? And yeah, somebody's going to buy more of this or pay me more for this in the future. Is this just the lazyification? I think I just made that word up. The lazyification of investing?
It's a gold rush right now because I feel like people feel that they're getting in at the beginning, that if they know about this before the average person on the street knows about an NFT, they're going to be able to buy it now and sell it for way more money in the future. And it just the whole market right now is reliant on more people buying higher than you.
I'm so careful not to dismiss it. Like, I don't know. I'm so careful not to dismiss things like that because I feel like we fall in the trap of becoming boomers ourselves and be like, I don't get it. And then it's like, maybe it is some new thing in the future that we're missing. No.
It's fine. What's to stop? And I want to give this the time of day. So what is to stop Logan Paul from going, cool, I sold out, I got my $4 or $5 million, whatever. What's to stop Logan Paul from going, yo, designer, let's go round 2. Let's go. Let's make another digital art.
You do that.
Nothing stops him.
But doesn't that dilute the value of the other one?
No, because they're each different.
Kevin doesn't understand.
Who cares if they're different? But because it has to dilute the value, because if you make one and then you make another one, in some way, I feel like then people start thinking, well, he's just going to make another one.
No.
And the next one could look cooler.
They each have value.
No, it's no more diluting than like first edition, second edition. It's like clothes. It's like anything, right? You've got first editions, second editions. It doesn't matter. People know they're.
So here's an extreme. Let's go extreme. How many whatever, I'm going to make up a number. Let's say there are 10,000 first edition Charizards in the world. Okay, we got 7 billion people in the world. There's no way that 10,000 Charizards in the world are going to have the same value as if Pokemon manufactured 7 billion first edition Charizards in the world. Or even if they were all unique and it's Charizard 1, 2, 3, 4, all the way up to 7 billion. Editions. There's no way those first 10,000 are going to be as valuable.
That's actually incorrect because they did make further Charizards. So there are however many there are. So let's say 10,000. Pokemon has since printed an insane amounts of Charizard editions from different regions, different packs, different artwork, and they still hold their value. If anything, they went up in value. I mean, how much did Logan buy his for? For like 150,000 from Gary, and now what is it worth? $500,000?
300, so probably.
Yeah, but I mean the number. But the problem is, there are two things that go at play here. There's let's say, and we're making this number up. Let's say the supply of Charizards was 10,000. Now all of a sudden, the value of these Charizards goes to, I don't know, 20,000, 50,000, whatever it is. Now Pokemon's like, well, shit, we'll just make, we'll just print another 30,000.
Monetize.
Naughty word, yeah. Sorry. So we'll just print another 30,000 of them. But what if the demand went up exponentially faster than Pokemon actually printed them? So in theory, the value would continue to go up then because the demand just kept going up faster than the pace that they were actually printing these first edition Charizards.
I missed the argument. What's the argument?
So the argument is, okay, I mean, Andre. Here.
I don't know.
We will. No. It's. I gotta know the answer. I gotta know. Here we go. So.
Here we go.
Tell me if I'm crazy. So if we have 10,000, not $10, if we have 10,000 Charizard cards, and the popularity for these Charizards is, I don't know, I'm gonna say 100,000 people want the Charizards right now. And then, the value is whatever it is. But this is how many people want it right here, and this is how many there are. So then we go to, well, all of a sudden now 10 million people want this. So we've 100x'd in the amount of people who want these cards. And then Pokemon says, okay, well, we're going to go to 30K Charizards. So you've really done this, right? So you've got this exponential growth here. But so what you've done is, you've printed more. The value's gone up, but this has gone up 100x. This has gone up 3x. If this went up 100x, would those cards still have their value?
But I think you're missing an important premise here, which is they can't recreate the originals. That's the whole point. They don't just make they can't make the original Charizards anymore because the manufacturing systems aren't in place to recreate that card anyway, which is kind of the same premise of these currencies or these digital tokens, is that you cannot recreate the first one. And there's a distinguishing factor on the blockchain that you can tell that this was the first one that he issued. Sure, he can make replicas of it or copies of it with some small variations, but you can distinguish the differences between the first ever release run and the subsequent editions. So you can't.
It's got to take time for this market to mature. And I think it's Pokemon. Alex Becker actually is making some really good videos about NFTs. And one thing, when he compared Pokemon with NFTs, is that the Pokemon collectability has been over how many years at this point? Like 20 years. And every year, it's a slow increase. It's never gone from, let's say, $100 to $10,000 in a week. But we're seeing that in NFTs. We're seeing NFTs being bought for like $1,000 and immediately being flipped for like $10,000. That's not a normal market.
I don't disagree that for sure.
Yeah, I agree with Alex's argument that he says the market's going to crash. 99% of it is going to be worthless. There's going to be 1% that is going to crash hard, but I think long term it's going to be valuable. We have no idea which ones to pick. I've been trying to research this. I have no clue.
It's so easy to manipulate. So let's say, for instance, we have one of these, right? And I come out with it. I could sell it to you, Graham, and make a bunch of publicity and been like, I bought it for $1,000. I just sold to Graham for $10,000. And really, you maybe didn't even pay me $10,000 for it, right? And then you sell it to Andre for $100,000, and maybe you didn't even get the money. But we're just all in cahoots on this, increasing the price to continue to increase the price to sell it to somebody else down the road for a really bad price, right? We just want to inflate it, build the hype, and then whoever has it at the end, you can do so many different things. Like as far as stupid price.
You see the sales online, and it shows that a certain amount has been transferred into your wallet. So money would have to transfer. There's nothing saying then that you couldn't just give me money back on this time.
Exactly.
Yeah.
For sure. Jeremy's point still stands, but it is on the blockchain. It is public, but for sure, people could get together and theoretically be like, hey, you've got your liquid, Kevin, you got a mill. Let's do this. I'll start it off with you. You buy $10,000 of my token, and then Jeremy will buy off 100,000. Graham will spend $500,000, and then whatever, we'll pump it to $1 million, and then we'll give back Kevin his original $1 million, and then let's see who's the greater sucker. Who's the greater fool. That's for sure a definite criticism of that.
The traditional art market is super manipulated. It's amazing, and this is 50 times easier to manipulate, in my opinion.
I would not be surprised if this is literally 2017. If you guys remember ICOs, that was Ethereum game-changing thing. ICOs, this is like the ICO equivalent to me. And you're right. I think 1% of it is definitely going to have value. Which part of that 1%? I have no idea. I'm guessing the actual legitimate artists, if we have somebody oh, do you guys still hear me?
We hear you. We just don't see you.
Yeah. All right. I'll be right back.
Mine is too much Bitcoin, man.
I want to know. I love the learning about this. Oh, sorry, I went to solo lay it on Andre. I meant to not do that. There we go. Okay. Oh, well, I don't want to do that either. This one. There we go. Okay. So, I could just briefly do that. There we go. So, I get what Andre's saying with you could have these unique tokens and that they're all unique, but I guess maybe I'm just missing it because at some point people run out of money, right? Or do they not?
Yeah.
Yeah. No, 100%. Yeah.
So are you guys gonna go investing into these, or if it's and I want to ask Andre this too, if it's like ICOs, which didn't exactly end well, is it something we should be cautious of?
I would be willing to take a gamble on crypto punks. There are these little characters. Yeah, I crypto punks.
Graham's no, guys, let me tell you the real deal.
You're buying this right now.
Oh my gosh.
$1,000. I kid you not. That's 15 grand, or around there.
Those are as simple as pixel
art.
art.
If the market were to crash, I would have no problem being all right, I'm going to throw $1,000 in one of these things. See what happens.
Gosh, I don't know, man.
I'm willing to basically just light that money on fire and just be like, you know what? If it's worth something one day, great.
I think it's better to literally make a video on YouTube, you burning $1,000. You'd get way more views and way more likes.
Wait,
if I had $1,000,
Andre, I gotta know. are you saying invest in these or not, or like stay away? They're dangerous. It's going to be ICO collapse. Because I'm having so much trouble with this.
I would caution ICO, honestly. I agree with Graham. 1% of it will hold value. I mean, it's all going to crash 90% no matter what. But long term, we'll find out which ones are the valuable ones. And like I said, like maybe the metric is going to be like actual artists. Like what if Mitsuhiro Arita, like the guy who designed Charizard, issues his own digital version of like 1 of 100? Like people would like eat that up, and that would hold value, I'm sure. Or like if Banksy comes along and is like, hey, you know, I'm going to do my own version of some political statement, then like, yeah, that's going to hold its value, right? But
the saddest thing is we actually have to take this realistic. And here's why. I remember the first time I heard of Bitcoin, I said, oh my gosh, that sounds so stupid. You're telling me I got to trade my real money for fake money? How dumb is that? And because of that, now we have to literally take everything realistic forever, and the possibility that this could be the next big thing.
I mean, you know who said that? We said that when we went from like gold to cash. We're like, I'm going to trade in my shiny rocks for paper. That's a scam. And then we went from paper to like these plastic cards. You're telling me I have to give up my paper for this plastic? No, you know, and then we went from plastic to these digital accounts and bank accounts. Like what? That's a scam. So it's like this constant evolution. And if you don't keep up, you're going to get left behind. But there's the problem, like differentiating between the scams and the future revolutions. And that's the hard part.
I got to ask this. So I see this comment here, and it says that Gary Vee is going all in on NFTs. Okay, I'm going to make I'm going to make a statement here that is not designed to offend Gary Vee. I'm just like part of me, I say the same thing about, and I shouldn't say I say the same thing. I question the same thing with Michael Burry, who's shorting Tesla.
Yeah.
Is Gary Vee just trying to be right one more time about something?
Ooh.
He's been in NFT before some of the craze. I think he was in it, talking about it right as it was going up, and he's kept the same message from the beginning to now. I think 4 months ago, no one would have had a clue about NFTs.
Also, I
don't
think it's fair to like hold Gary to the standard, because he has so many wealthy friends that reach out to him and say like, hey, I'm going to do this. So he gets in, like Graham said, at the very beginning, which is not something 99.9% of people will ever even get to do. So even if Gary turns out to be right to some context, means absolutely nothing to the average person, in my opinion.
I don't know. I mean, sometimes I just wonder that there are people who were really successful. Like, for example, you get like the Michael Burry, really successful because of The Big Short, right? Shorting the housing market and being right. And sometimes I just wonder that these people are throwing all these Hail Marys to try to just be right again. And I'm so skeptical about these NFTs that part of me is wondering, is this Gary Vee throwing a Hail Mary, or does he legitimately see something? And I don't know. Like, I like Gary Vee, don't get me wrong. I'm just wondering, like,
can it be both?
Well, maybe.
Yeah, I think it could be both.
I think he's right. 10 years from now, you're going to look back and there's going to be some NFTs that are 100 times what they are today. But I think 99% of people will probably get burned.
Yeah, you're going to see a lot of those CNBC articles that are like, if you had invested $1,000 into this one thing, you would have $3 million.
Oh, that's their favorite thing. They find one of the if you had bought this at this day and this month, so that at this point you would make a amount of money.
So sure. Wow.
I mean, but Nifties, sorry to get off the topic. Nifties, I don't know if NFTs or Nifties, I call them Nifties, but yield farming, that's pretty cool. Like, I like that. You guys familiar with yield farming?
You mean staking? Like,
yeah, staking. Yeah, sure. So for anybody unfamiliar, yield farming is basically staking, aka locking up your money into a smart contract for some predetermined amount of time in order to do something that the contract wants to fulfill, which is usually providing liquidity to some entity like a miner or a business so that they can trade. So like super fancy words, but kind of like Citadel and Robinhood, right? Like they provide us liquidity with stocks, and all liquidity does is it stabilizes the stock prices, because if we didn't have liquidity, then the differences between what Kevin buys his stock and what I buy my stock at would be like crazy, crazy different. So to stabilize the price, we have to have a lot of trades and exchanges. That's why we have liquidity. But we have market makers like Citadel, which could be obviously problematic for companies like Robinhood because then you have conflict of interests. But what if we were to remove Citadel from the equation and we became Citadel because we are now the market maker, because we are staking our own money or our own assets, whether that's NFTs or whatever. And so we're providing liquidity to the market in exchange for getting interest on that money. So that's yield farming.
I mean, this is very similar to, it sounds like, at least, I want to hear your thought on this. This is very similar to the BlockFi model, where they're paying you interest because they're able to take the Bitcoin that you own and lend it to institutions who need it for, overnight periods of times or 2 days or 3 days or whatever. And there's a huge market for this. How sustainable is this, though? I mean, are we going to see this interest rate for a year and then, it's going to plummet over time? I'm sure it has to, but is staking sustainable?
I think so. I don't see why it wouldn't be, especially if it's temporary, short-term bursts of events like that. If it's not like long-term, I could see why they'd be sustainable. But it's such a brand new market. I think that's eventually what's going to be the bridge between these centralized exchanges and decentralized ones in the future.
What do you think, Jeremy? Are we going to lose the dollar? Is fiat going away?
I just remember the good old days when we used to just sit back and buy Coca-Cola stock and Pepsi stock, and now I got to worry about this damn confusing stuff, man.
Well, I want to know, Jeremy, is fiat going away? Is the dollar going to get replaced at some point? Is there going to be some new economy, or do you think now, like all this stuff can run along the side, but I can make a good living, or I can invest successfully just focusing on stocks and I don't have to even pay attention to this stuff?
Well, I mean, I think there's just so much money to be made in so many industries. You don't have to play it all. First off, is the dollar going away? I have no clue. Maybe it is, maybe it isn't. I wish I was smart enough to really give you an insight there. But at the end of the day, and I think this is something that's important for everybody to understand. Like, you don't have to be great at like all these different markets. Like, pick the ones you're really good at, you really understand. Go after those. If you know real estate really good, there's so much money to be made in real estate. Do that. Stocks, cryptos, whatever. I mean, this NFTs. Let me be very clear. When Graham said people are asking what is an NFT, that was me on my dummy account typing that in. What is an NFT? Because I didn't even know about that. That's just like crazy, man.
Yeah, it's crazy world.
But,
go ahead.
Never know. No, I was going to say, you never really know with these things. Like I said, with the Bitcoin example, a digital currency, like what? And then, now look at everybody all of a sudden wants to own Bitcoin.
That's a really good thing you said, though. That's so interesting because you said, stick to the thing you know. How do you balance between what you know and what you're good at to the whole like age-old diversify thing where it's like, what do you do then? Like, I know Kevin's really good at real estate. I know, like, some of you guys are amazing at real estate. Some of you are amazing at stocks, but then now we have crypto. Like, how do you balance between what you think you know and what, the traditional investment advice is, which is diversify?
Yeah, I think it's if you don't know something very well, but you want to play in it, just play in a little bit, right? So like I have a little bit invested in a stock that owns a lot of Bitcoin, right? I think Graham, I think you're directly invested in a little bit of Bitcoin, right? Compared to your full net worth. Yeah. Andre, I don't know, your whole situation as far as what you invest in. I would assume you're crypto heavy versus stock heavy.
I am.
Yeah, Kevin's got 100 mil in everything, I think. So he's a different category. But yeah. But I mean, what are you, Andre, as far as crypto versus stocks, if you don't mind sharing? And then Graham, how much do you have in crypto as a percent of your net worth, would you say?
Well, I put in originally about 100K into crypto, which turned into 800 at the peak within like whatever it was, 2 months, 3 months. And stocks, I'm at around 300K out of a principal equity of about, 120, something like that. So 300 versus 800.
Okay.
Yeah.
And then Graham, you have a really small percentage of your net worth in crypto, right?
Yeah. I think now it's about 1.5, just under 2%. So it's small.
What about you, Kevin, as far as your crypto exposure?
2.5 to 3.
Okay.
Percent.
Yeah.
Okay, or million. I don't know.
Sorry. 2.5 to 3%. No. I would be okay getting my BlockFi to $1 million. And I don't want to sell my Bitcoin in Robinhood because I do not want to pay another dime to the state of California, and I will get destroyed. I'll lose 55% instantly, right? I'd
Yeah.
rather the market crash than pay taxes to the government.
Sure.
Like seriously, like me selling a gain is literally
Rich people trying
the
to
market
avoid
crashing
taxes.
55% is what it feels like.
Yeah.
But anyway,
Those taxes
I'd be
help
willing
us.
to go up. So that would put me at 5-6% or something like that. But I mean, dude, you're like 50% crypto, man.
No,
Like,
no, no. I'm
geez.
30%. I'm no more than 30. There's another
Oh,
third
okay.
asset, which I'm sure is obvious at this point. But you know.
You still haven't revealed?
Kevin, where do you think the money from the stimmies come from? Rich people's taxes. What, you think it's gonna come from normal consumers' taxes? They normally get their tax refunds back. Their taxes aren't helping fund the stimulus. Your taxes are. So quit trying to avoid paying them when you make so much. And paying your taxes actually helps more people, even though it doesn't help you. But I shouldn't be so upset about it. Nobody cares about my opinion.
No,
You're just like dangling it, man.
it's because I'm leaving to go to Russia in a month actually, and I need some content. So I'm filming that, and I want to release it when I'm over there because filming content over there is way harder. So I just want to have some backup.
Awesome, man. Are you gonna meet what's his name? Who's going to the gulag? Yeah, no, not Vlad. No, that was a good one. No, who's the guy? The guy
Alexei?
who
Alexei.
the Russian dissident who got poisoned. Yeah.
Alexei.
He's going to a gulag for 2 years.
Sure.
Like, can we get an interview on your
I mean,
channel?
hopefully I don't meet up with him. No, I don't want to go to a gulag.
Dude, I watched this documentary on
Story is
gulags.
phenomenal. No. Putin's wealth. Oh my gosh. I think he is the richest man on earth just because he stole the entire wealth of the country. Like,
What do you think it is? What do you think his wealth is?
his wealth is the entire country. Like he just stole everything and he funneled it into this. I mean, lots of other business ventures, but one mega palace that's rivals anything you've seen the Queen live in. It's crazy.
Are you
It's an
pulling it up?
hour-long It's an hour-long documentary. It's crazy.
GDP of Russia.
I want to see this house, man. I don't know. I'm getting educated. I don't know anything about this. There's some mega house.
Say again?
A duplex.
The duplex.
It's a duplex. I don't know.
See how it's at.
Speaking of which, Graham,
Yeah.
dude, how does this work? You don't have a duplex in Vegas.
No.
Y'all but Jack's living there. Like,
Yep.
I thought you were gonna buy the house next door. How's this gonna work when the little Gramblings come along?
We got extra bedrooms, and there's a couch. Sleep on the couch.
Did you say
That's
Grambling? That's awesome.
Yeah,
Oh, instead of gremlins, gremlins.
Gremlins.
I like that.
I was gonna say, yeah.
Oh, we got a couch. That'll be fine.
That's awesome. No, that's cool.
How do you split your time? Does it? I know like IRS has certain rules, but what are those rules as far as staying in Vegas versus?
It's supposed to be 6 months plus a day.
Okay.
Realistically, it's stupid to cut it that close, so I'm going to be spending the majority of time here.
Gotcha.
Yeah,
Wow.
I go back if there's like a podcast guest or to go and see family for a week, and that's really about it. But
I hope you really love the weather, Kevin, in California.
I know it's very expensive.
it's been
I
nice.
have to say, I mean, I drove up to Santa Barbara today. It was out of the last month, I've probably spent like an hour outside, and that was all today, I feel like. So
Lucky
it was an
Kevin.
expensive hour, but it was a nice hour.
What was in Santa Barbara?
Dude.
Well, Lauren was getting a fertility treatment, and at the same while that was happening, I went to visit my abandoned, stupid Santa Barbara project that's been sitting in planning with Santa Barbara forever. I'm like, wow, if I just put that money into Bitcoin instead of that fixer upper, man. Whew, I should have put all my Santa Barbara house money, whatever. I think I've got what do I have in it? I think I've got like 300-400K or whatever in it.
I can't remember.
I should have
if
just
he's
had
talking
that
about the
money
one with
go
the
directly
sinkhole.
into Logan Paul's digital freaking art.
NFTs, yeah, man. That's where it's at.
I
Actually,
still don't get it. I just are you going to invest in them? Are you going to try to find the 10% that's going to survive?
no, I'm all right. I think there's better
I would do it after a crash because I do believe in the concept. I think long term, I think it's interesting. I wouldn't be surprised. I think now it's a bit of a gimmicky thing, but I do think give it 10, 20 years, there's going to be some cool digital assets online that everyone is going to look back on. CryptoKitties could be one of them, just because of a bit of the fun factor of it.
Yeah, it's
Do you know, I don't know if this is even publicly known or not, but do you know how many Bitcoin changed hands in a 24-hour period? Like what the volume is there?
Like 60,000 Bitcoin?
Big question. I don't know off the top of my head. Coin market cap.
People have
Let's
that?
see what the volume is. Volume is 111 billion. So divide that by the current price. 111 billion gets exchanged, I guess, daily, 24 hours. Crazy.
Okay. Who's got the math on that? Because I've been trying to see if it is like 60,000. I can't do that in my head.
Yeah, Coinbase Pro does that.
Let me see. I'm gonna see. Somebody in the comments is gonna do it. I'm sure. I'm trying to see. I'm just trying to figure out what the float is there, because obviously, imagine with how many more people over time just buy Bitcoin simply to hold and literally don't care about selling it. I just would imagine over time.
The majority is held. The majority hasn't moved in the last year. Yeah, most people after they buy it, they just hold on to it. That's why the whole hodl thing, right? The meme.
Yeah.
Just
So
I
would imagine over time the float will go even lower and lower, but
for sure.
Now with the mining I'm doing,
especially since the issuance is going to get cut in half. So, for sure.
I gotta know, Andre, you've got this. You're running a dividend portfolio. And I thank you for your video on the suggestion to go into divs. I've been meaning to ask you, doesn't it piss you off, the taxes on the dividends?
That's exactly why I've stopped prioritizing dividend stock purchases, and I've started focusing more on growth because my income situation changed. Right. I wish I mean, it's kind of a good problem to have, but that's kind of why I went the other direction, because the taxes I'm paying now based on my income is making me cry, because I'm like, this is money I never used to pay for taxes for passive income. And now that I'm seeing my career trajectory on a completely different path from when I started, my investing strategy was forced to change because of it.
That's what I against dividends. But Jeremy, you have a dividend portfolio, don't you?
Dude, I can't believe it. So I started this dividend account in the private group probably about a year and a half ago. And just to kind of see how a dividend account only dividend stocks, how it would perform. And I was like, this account's going to get trashed by the public account. That account, not even taking in the dividends received in that account, the account in total is up over 100%.
Wow.
Just
what's the average dividend yield on that?
What's after?
I don't know the numbers.
It would be high, assuming your dividend yield. I'm assuming if it's that high as far as growth, then your dividend yield average is probably no more than 1 or 2%. I'm assuming.
A lot of them, it's 4%. It depends. I could go through the stocks and pull it up here in just a second and tell you guys what actual stocks
if you
are.
have the average yield on that, and if it's 4% or more, then that's a godly return.
Yeah.
But then again, everything's up.
Yeah, I was gonna say I'm kind of lucky, because a lot of those stocks I did purchase in the late spring or summertime as far as falling money. So it did get a little lucky, but still, I'm just I can't believe that account's up that much.
I imagine when I'm old and ready to retire, whenever that is, I would convert a lot of my money into something that pays me passive income, which is probably going to be dividends, because I'm assuming I'm not going to be making this amount of crazy income. That's what it would make sense to do. But go ahead.
I was just going to tell you guys the stocks that are in that account. It's Wynn, Nordstrom, JP Morgan, Qualcomm, Walgreens, Tapestry, Foot Locker. So some of those yields might not be super high. Some of those, the dividends are coming back this year. And some of those are pretty high. JP Morgan's are pretty good. WBA is usually 4%.
Yeah, JPM is a solid blue chip in that. What is it? Dividend yields? Robinhood's is 2.43%. Robinhood's never correct on their dividend yields. I don't know if that's accurate.
Well, and when you bought these, the yield was probably way high.
That
was the time. interestingly, like AT&T is one of those that hasn't really moved. It went down to like $30 and it sat at $30 forever for like the last year. But I mean, AT&T, I think it's still like a 7% yield. But all of these other ones you picked, yeah, I mean, these guys are up double, so your yield probably halved from when you bought it. But you're still getting that yield because of when you bought in. So I mean, that's just awesome freaking timing, man. I love that. Yeah. But yeah, I mean, so don't touch that. That's great. But I mean, otherwise, yeah, the taxes. Otherwise, like I feel like today, I don't think you would plow most of your money into a div, would you?
Probably not. But I will say it's interesting. Like I think Warren Buffett's Coca-Cola shares he bought back in the 80s, I think he makes more dividend yield than he actually paid per share for that stock. And like people that bought Apple stock, if you were smart enough to buy it like 15 years ago, those people actually make more in dividends than the shares actually were costing them back in the day when they were buying them. Like that's just like a crazy concept to even think of.
It's weird.
It is crazy. I do think that if there's a reckoning and the stock market completely takes a crap, then I feel like value investing will probably come back to be a little bit more relevant and less meme investing, which I totally see. I just don't know when it's going to happen. I don't know.
That's already happening, I feel like, to a little bit of extent. You've seen the money rotate. Yeah, like yesterday, today, you saw a lot of money rotate from these super high growth names into, like, Wynn was up, I think, 7 or 8% today. You know, and there's a lot of those like non-tech related companies have actually been performing really well. And like, there's just money rotating out of high growth and into values. So it's interesting. Divs even too.
Value investing will make a comeback.
It is nice to know that no matter what, well, not no matter what, but given most situations, you'll have a consistent amount coming in. I think in my total portfolio, it's about a 1% dividend overall. So when you account for the whole value of everything, it's about 1%.
Okay. My yield is about between 4 and 5%. Yield on cost.
Yeah, but you're talking 7-8% Bitcoin here.
Yeah, exactly. Yeah, it's crazy. Now, how are you guys liking BlockFi? I know, Graham, you started your BlockFi account.
I liked it. I actually, after we did our podcast together, I think it was that night, was it? I can't remember. It was around there that I moved over the Bitcoin to BlockFi. And I did a little test at first just to see what it was like. And then I woke up the next day. I'm like, wait a second, there's interest in there. And something about seeing like, and I didn't move that much, but I saw like $8 in interest in there the next day. I'm like, wait a second, that's $8. That's a Subway. That's
a half all you can eat. Sushi.
So I'm like, all right, let me move the rest over. So I moved over the Bitcoin. I got to move over the Ethereum. But
I need to look into BlockFi.
We had a few questions asking like, aren't you afraid that they get hacked, or why are you keeping 100% of it in BlockFi because that's a hot wallet, right? So if they get hacked, then all the money disappears.
I'm willing to take the. I mean, my thinking, and this might be stupid thing, I bought in an amount that I was prepared to fully write off. I was just like, well, you know what? If I lose 100% of it, then I get a good video out of it. I was hacked. Imagine that. So, if it were like something were to happen, it would be disappointing, obviously. But so, I'm not investing an amount that I'm not prepared to lose. Like,
I'm with you. So like I do want to experiment with other interest-paying companies. I know there's like Celsius.io, and so I think it would be smart if we like at least diversified brokerages and just spread that money out. Because that is kind of terrifying if you lose.
It's a hassle though. Like I like having just like 2 or 3 main accounts that I use, and that's it. And then it becomes a hassle to be like, oh, I got like a little bit here, a little bit here, a little bit here.
Oh, well, actually, that's a good question for Kevin. So, Kevin, are you afraid that your SIPC coverage is like way over that? I mean,
yeah, it's actually something I spend like 0 time thinking about. I probably should more think about those things. Like, what happens if like a Robinhood collapses, and they're like, well, with a thick Sigma event, sorry, well, like, okay, well, shit. I mean, poopy. Like, I don't want that. Like, so yeah, it's a problem. But so I mean, I've got the bulk of my portfolio at JP Morgan. I think I feel pretty comfortable with that. I've got a chunk, and the rest is kind of evenly divided between Robinhood, M1 Finance, and Webull. So I don't know. I think I've just become so focused on how can I make as the most money freaking possible, so that if I lose a chunk of money because somebody robs me or steals it, or SIP, whatever, or something tanks, something goes away, or bankrupt, that I'm still happy, I'm still okay. Or my real goal is, how can I take my earnings every month, invest them, so that when it's time to pay taxes, I'm just paying those with gains.
Speaking of it, did you find out about paying taxes with margin and writing off?
Oh, no, because I'm going to do it anyway, so I don't care. Whatever the answer is, I'll find out next year.
You'll find out the next year whether or not that's a write-off or not.
Right.
Yeah, and even if it's not, 1.49% or whatever on the line, I don't care. For me, I just I got to focus on the big dollar, which, so much of me wants to just keep buying real estate. But I'll tell you, and even especially on days like today, it's like, oh man, real estate doesn't just flash crash like this. But just the ease of sitting here, once you have a portfolio, like you want to build your wealth fast. Look, real estate's such a great way to start, like 0 to $1 million. But I don't know. There's something about us being able to just sit here, for example, and talk about stocks or investments or whatever. And if we wanted to trade right now, take me 30 seconds to execute a $500,000 trade. If we all wanted to do it, we could all do it at the same time. I just love it. It's so simple.
Yeah, that was one of the questions I had for you. Like, you're making so much money with social media and YouTube that, like, even real estate, even though you still made a ton of money with real estate, the amount of time required to manage the real estate, it kind of doesn't make sense in comparison to what you're able to do without it.
Yeah, and that's where I've really tried putting so much of it on autopilot, and I probably have way too much trust, but I trust these guys. Like, shout out to Mark and Nick and Ben. These guys, they're such hard workers, and they motivate me to buy more of these houses, because I just literally, like, I left the key in the kitchen or whatever, or I put a lockbox on, just do the usual. And then like 6 weeks later, I'm like, oh, damn. Like, that's the only thing that makes it okay for me right now. Because otherwise it's just like, it's anytime you work, the more people you work with, the more headache you have. At least what I found. I mean, Jeremy, look, I'm not trying to hit you. Like, you figured it out, man. Like, dude, you got like 60 1099s or whatever. Look,
dude,
no thanks, man.
it is headaches. I agree, man. Like, as you scale up, it's like, I had to get on a call at 1:30 a.m. on Sunday night, and I was on the phone, and I was so exhausted. By the time I got off the phone, it was almost 3 a.m. Right? And I mean, you're always on the clock. When you got a large team behind you, like, you're always on the clock. There's always different situations. There's always like egos. There's always drama. Like, there's always like stuff to deal with, and it is that I will say it's not for everybody, and it is a lot. All I can think is like how easy people had it, like back in the day, like in the 80s, man. If you had a lot of money in the 80s, put your money in a savings account, you get like 12%, 15%. Here we are worried about the next.
You have 7% inflation every year.
That's true. But I mean, like, geez, man, like, oh man, now we have to work so hard for our money to make us money, man. It's so easy.
Hey, look, Jeremy's got a point though, because sure, we had inflation, Grant, but I mean, people who bought real estate in the 70s or 80s, they got the benefit of leveraging in, and then if inflation basically eradicating their debt, and these asset values just going through the roof. Like, anybody who's bought real estate in the 80s, and they're like, oh, I've been here since the 80s. It's like, oh my gosh, like that's just buy a house and wait 40 years in that kind of environment.
I bought my house for $20,000, you lazy millennial.
Right? Now it's like $800,000. You look at the tax history, it's like, what?
Where do you see the real estate market going over the next year or two? Do you think interest rates are going to go up and start to dampen values? Do you think more people are going to start to sell off?
Yeah, I mean, we've already seen a little bit of interest rates move up because of the 10-year, like you mentioned. But I think for us to really see a real estate correction, the only thing that's going to do it, and who knows, there could be a black swan, but really the big thing that's going to do it is rates having to, like, getting forced to go up, like you're asking, is the Fed saying we got to push the discount rate back to 2.5%. Oh my gosh, we got to go to 3%. But the problem is twofold. First, I don't think that's going to happen until 2024. That we're going to see 2.5% again. Honestly, we might not see 2.5% until 2026. We might not start raising rates until 2024, which is crazy because it's just going to continue to support this real estate, what feels like a bubble that we're in. Although really what it is it's white collar workers or people like us who can keep buying real estate. And it's people who are working a wage job who can't anymore because they're priced out. But I don't know. I don't see anything else crashing the real estate market, and I just don't see that happening for 4, 5, 6 years. And I feel like that's bad because like maybe I'm missing something, but I just don't see it coming anytime soon.
And Kevin, economically speaking, if there's an entire generation that could be potentially displaced from real estate because of the environment that we're in, because of people like us buying up this real estate, do you think that would do anything to the future of our economy if people are priced out of assets?
Well, if people are priced out, they move to cheaper areas is what happens. So when people can't afford San Francisco anymore, they move. When people can't afford LA anymore, they move. So what's actually happening in LA, for example, is you're seeing this flight out of California. You're seeing, it's a popular statistic that gets referenced a lot, but you're actually at the same time seeing the poverty rate going down because the poorer people are oftentimes moving out. They're moving out of the area. So you're actually just like richifying areas, or you're building smaller homes in San Francisco. It's like, oh well, damn, or darn, I guess I'm in a 500 square foot apartment instead of 1,000 square foot apartment out here. So in a weird way, I think as long as there's a desire for people to live in an area, there's a reason for somebody to live somewhere. I think that's more important than the pricing in a very bizarre way, because there are always going to be people who have enough income to pay those prices, which is just very bizarre. Obviously, rents get restricted by incomes. And so at some point, investors leave the market. But I mean, look at San Francisco,
That's an interesting point about having an area reaching somewhat of a plateau.
Oh, come on, don't freeze, don't freeze, don't freeze.
There's only so many people willing to buy in before prices somewhat peak. But then those same people go and just look for another area that might be undervalued relative to that. Good point.
Yeah, that happens in LA all the time, right? It's like all of a sudden one neighborhood's like hot, and then all of a sudden it's like, oh, Century City's now the next place that's popping. Wasn't that like the thing over the last 10 years? Right. It's like one neighborhood to the next. Oh, this is going to be the next one that starts going up.
That's why Texas is popping. That's why Vegas is going to pop. That's why for sure.
Yeah, Phoenix was one of those areas. I think it was 15% increases year over year. Phoenix.
Yeah. Which is kind of interesting to me. So, Kevin, why aren't you front running that, which seems obviously going to happen, where people are going to get priced out, and invest maybe instead in the cheaper areas like Texas or Vegas? Because you obviously got the money to do it.
Kevin should come to Texas and develop a neighborhood.
In something like in Vegas, or
if I invested out of the area, first of all, I'd have to have a jet is what I've determined. And that's like, I'm not trying to be ridiculous about it, but seriously, like I have to be able to get there regularly and quickly wherever I'm investing. And I can't afford a jet, so I'm not doing it. Like I want to be able to be at my real estate.
Jeremy's just like, you can't afford a jet.
And quickly. And so, for example, like let's say I had a real estate fund. It makes sense what Cardone does. Takes a big $40 million write-off on a jet and doesn't pay taxes for 2 years. It's brilliant. But now it's a marketing tool. The plane is a marketing tool, and it's an easy way to get around to all the real estate. So it totally makes sense. But, for me to really say like, all right, I'm going to go to Texas and buy single family houses. I mean, how often am I going to go to Texas? Am I going to go there 3 times a year? I'm not going to go there every month. I'm not interested in that. Like I'll buy single family houses out here, maybe one day in the future. But it would really have to be for something.
Kevin can definitely afford a jet because I've heard of pilots affording their own jets by just renting out their jets. They're not rich in their own rights, but because they know how to fly the jet, they fly it for rich people, and that's enough to pay it off for them.
Way bigger than just, let me go buy a single family house.
Kevin, you easily afford a jet. Easily Okay, like you could get one of those Honda Jets, brand new for like I think they're $5 million. Like you got that. Like you
there's programs like Private Jet that do that stuff that you can become a private equity partner and then just have access to it at like crazy discounted rates.
Check out the Honda Jet, man.
Yeah, but you need to find crazy wedge deals to justify it.
Yeah, no, you'd have to have some big money flowing to justify it. I didn't know about that. Yeah, because I was like, oh my gosh, then you have to hire a pilot and all this stuff, and then like I don't want to crash, and like how much is a parachute? I don't know. Sometimes I just get I talk myself out of stuff probably prematurely. So thank you for that counter argument.
Yeah.
Sure.
Well, hey, let's just all go on a Honda Jet, man. That can make it. I don't know if you can make it from the West Coast to East Coast on one fuel, but I think you can go. You can go from for sure California to at least Texas. I know that for sure with the Honda Jet. It's got two engines. It's like $5 million.
What I really wanted to do is we all pool our money together and get like a huge residential complex, like 100.
I've mentioned that idea before.
He wants to go the OTV route.
Just get a crazy mansion. I don't know.
That's a great idea, Kevin. And then we could have Graham and Andre take care of the kids on the weekend. That would be amazing. Great idea, guys. Love it.
For sure. Yeah. That's I think a way to do it is and the big multifamily stuff, right? Maybe, but I don't know. Again though, like, okay, so here's the thing, like stocks versus real estate again, right? So if your net worth is over, $1 million, $2 million, $3 million, $4 million, whatever, part of me is just like, okay, cool. So you go buy an apartment building, you get an interest only loan, leveraged up, you get your 13% rate of return or whatever, leveraged up on the real estate, with depreciation, the leverage depreciation and stuff. Maybe you could get 15%. Okay. I mean, great. It's diversification, but I mean, then you got Tesla looking at you too. And I'm like, I don't know.
Write-offs. That's really what it is. You would postpone paying a lot of taxes for the first few years.
That's true. Yeah.
It's interesting to see your transition, Kevin, though, because I definitely remember you a few years ago. You were definitely, all the real estate train, and you were definitely, real estate's better than stocks. And it's interesting now you're making this argument that stocks are better than real estate. It's just funny to see kind of things come full circle.
It's and you're right. It's where you are though, with net worth, in my opinion. If I have 5 million in the markets and I make a 10% return, why am I going to leave my house? That's 500 grand a year, and I'm doing nothing, right? Whereas if I have $10,000 and that's my net worth is $10,000 cash, let's say, am I going to use that $10,000 and try to go YOLO Wall Street bet stocks and maybe double, but then on the next one I lose half my money or more than half of my money, I lose 70% of my money, then I'm down, and I'm like, oh my gosh, this was my life savings? Or do I take that $10,000, $20,000, whatever it is, go buy a little fixer-upper? Now I control a $300,000 or $400,000 house, and I can create $100,000 of equity for sure, rather than speculate with a $10,000 stock portfolio. And so I think that's where that transition came from, is going from going from literally zero, working at $9 an hour at Robinhood, or not Robinhood, Red Robin, working $9 an hour.
You chill know that.
No wonder it has so many issues. You're paying you $9. No wonder it has so many issues.
Yeah, but I mean, you get the idea, right? Like, so you like going from that's what gave me my ability to invest in stocks, is all the real estate. Well, and so I owe so much to that. But now I'm looking at it like, thanks, but I've kind of I feel like in some sense I've kind of graduated that, and it sounds so horrible because I love it so much. But
no, that makes sense. Literally, all of us, I feel like, have graduated from something because of our circumstances. Like with me, with dividends, to focusing more on growth, just because of YouTube, to you doing more stocks, to Graham focusing also more on YouTube rather than real estate. So kind of all of us have gone through this evolution process.
That's really all it is. When I had all the free time in the world, I just loaded it up with real estate. I was at those properties twice a day. I remember I would wake up early, go to the property, check it out, go to the office, after 6, after 7, go to the gym, go back to the property, see what they've done. I did that for months. But and that's what it took to really do well at it in the beginning. But when you have no free time and your time is so valuable, going and spending even 30 minutes in the car, that opportunity that you lose to do anything else that has a higher yield starts adding up.
Kevin, for those that maybe are watching this and don't even know how to do something like this, how do you get a $300 or you even said $400,000 house with only $10,000 to your name? Like, how can somebody do that?
Yeah, the best example, and it might sound redundant for those who have heard it, but it's so valuable. The best example for me is just how I bought my first place, and that was, I didn't have the income. I couldn't qualify for the loan. Lauren and I together couldn't qualify for the loan because we didn't have 2 years of income. We didn't even have 1 year to date income, So, I'm filling out my loan application for this house, and they're like, what's your job? Real estate agent. They're like, okay, but didn't you work at Red Robin? Yeah, Red Robin. I'm like, no, I quit that. I literally have no income. I'm like, okay, well, you can't really qualify with that. So we found a really good deal. It was $305,000, and we put 3.5% down on it together. So we found the deal. It was our money. We're taking the risk on it. Everything is us. Now it just became a game of how do we trick the system to let us actually buy this property. We had okay credit. It was like 720 or whatever. We didn't have 740s at that, 720 credit or something like that. Big deal. We're like, we just want to get in.
Credit.
One of the reasons I wanted to get in because it was a real estate agent, wanted to sell more homes, and that's a great way to sell things is when you're buying it. Mm-hmm. But you put 3.5% down. My father co-signed, 1% owner. I take 49%. Lauren takes 50%. Qualify with his income. Boom. We're in a $305,000 house in a $450,000 neighborhood. We take out a loan from the bank for $50,000 and fix it up. FHA 203K loan. And the rest.
Not everyone can have the help of the parent and offering their income for just 1% equity. While that is a great family benefit or help, not everyone in every family can do that.
This is history. All of a sudden, our net worth literally went from my $9,000 and Lauren's $9,000 to us fixing up the house, refinancing it a year later. And we're like, holy crap, our net worth just went from, $10,000 each to $75,000 each. So we're at $150,000 joint net worth. It's like, we got to do more of that. I couldn't have done that with stocks. If I bought the S&P 500 index fund in 2012, I would have tripled my money. But dude, I'd be sitting on $30,000.
Right.
I love that. That's a great story, man.
And a great comparison.
Graham, what's the least you ever put down for properties? Do you always do like 20% or what?
15 was the least. I always plan on putting 25% down, but I got a 15% offer a few years ago. So I put 15% down. And then on this place in Vegas was also 15% down.
15%. Okay. Let me ask you guys a question. I would love to hear each of your perspectives on this. What would need to happen in the overall economy or market for you guys to say we're in a bubble time? Like, what would you need to see happening to make you say, okay, we're just in a huge financial bubble in everything, stocks, cryptos, real estate, everything. Whoever wants to take it first can take it. I would love to hear your guys' perspective on that.
That's a really good question. What's like a definitive metric, right?
Yeah, or just like an activity, a vibe that's going on that makes you guys say, yeah, we're in just bubble times right now, and this is just waiting to pop.
I think when you see doubles and triples in prices in a short period of time, I think crypto in 2017 was obviously something was going to happen at some point, and it just when every day it goes up 20% for no reason at all. I think that was a clear sign. In terms of today, it becomes a lot more difficult to analyze that. GameStop, obviously, that was a unique situation, but I feel like people kept buying in, driving up the price. I know the whole story behind it, but that was something that to me was approaching like, hey, okay, people it's game of musical chairs.
I imagine if that happened to every stock in the stock market, then you'd be like, okay. But I mean, how much that would obviously never happen. But like, what's a clearly obvious
comment on game of musical
thing
chairs
that could happen? I don't know. Do you know, Kevin?
In a weird way, it kind of has happened, though, right? I mean, Andre, don't you feel like in a weird way, looking back to like last March, everything has like doubled or tripled or 5x?
Sure, but I mean, not in a crazy like short amount I guess you could say it's in a crazy short amount of time. It's only in a year that we've tripled, but we've also fallen a lot. So you could contribute it to that. It's like, yeah, but we've fallen a lot. So that's why we've tripled. We went back to the norm and then we've exceeded it. So we've doubled it. Is that really all that bubble? I don't know.
Yeah, there's also a lot more money that had entered the market that I think definitely contributes to that.
What is this for you, Jeremy? I feel like you've got the answer to this, and you're just
no. I don't. I can definitely make an argument that we're in some bubblish time now, but like something I think about is like, could we ever have a real sustained crash again in the not just economy but the markets? I'm talking real estate, stocks, cryptos, everything, because of the Fed backstop. And are we just in a day and age where it doesn't matter what happens, the Fed will just do whatever it has to do to keep the show going on? And like, will we ever have a real sustained crash? Because the one we had in March, February, March of last year, that was super sharp, but it didn't last. It was like, whoop.
That was my theory from last time when I put my tinfoil hat on, and you guys were like, that's a conspiracy theory. And I'm like, I just don't know if we'll ever see a crash, because if we do, the Fed or central bank would step in and just pull some lever, and it was like, oh, hey, we're back. I don't know.
I think that's totally possible. And because of that possibility, I think, Jeremy, the crux of your question is really, let's say I saw the signals right now of a bubble. I'm like, guaranteed this bubble. Would I sell? And the answer to that is no, because I'm forced crashing with taxes. So I have no incentive to sell. I have an incentive to reduce margin, for sure. There's an incentive to reduce margin. But like, for example, I sold twice for the first time in a while. I sold a week and a half ago, and on Monday morning, I sold some stocks just to reduce my margin a little bit because it was getting a little out of hand. And but would I like liquidate my real estate? Like, we're going into a bubble. Would I liquidate it, or would I just go, let's just ride it out? Same thing with my stocks. Like, just ride it out. Like, I don't know. Maybe I have too much faith in the direction of the country, or maybe I have too much faith in where my real estate is. Maybe I have too much faith in the stocks that I bought that in 10 years, it's all not going to matter anyway. It's all fine. Am I being complacent? I don't know.
That's what I kind of think, because you have to be right twice. You have to be right when you sell, and then you have to be right when you buy again. So the chances of being right twice, I think, get into the territory that maybe it's just best to hold.
Yeah, I think that's a good way to fundamentally analyze that question, is like, even if you knew, would you really do anything about it? I mean, unless there was some fortune teller with some 100% precision could tell me that, then yeah, obviously you would pull out. But since that would never happen, there's no way to get to 100% level certainty. So you'd get to maybe 90, 80%. I don't know how you would. And even on those terms, I still wouldn't sell. I'd probably just be like, yeah, whatever. I mean, I'll just continue dollar cost averaging in over a long term.
Yeah, I mean, exactly. That's the thing. It's like, if we didn't have a sustained down market this time for stocks, real estate, crypto, in a once in 100-year situation like this, what's the argument to make in the future? I mean, we would need obviously like the banking system to dry up and just lending. I mean, if capital dries up, that's when you get, businesses to lay off and you get a real bad situation. But would that ever happen? And that's just like what I have so much trouble wrapping my head around. I don't know if that would ever even happen again.
Yeah, exactly. I mean, yeah, unless money froze up and people stopped lending, that's pretty much the only way that it could crash it hard. I don't know.
I feel like if there is going to be another crash, it's going to be something that we would have no idea about right now.
Because yeah, you're right. Every crash is unique, and we have no idea where it's going.
It's going to be something. Let's look back. It's going to be something none of us have considered right now.
Okay, let's make a bet right now. Let's each make our own black swan prediction. So,
NFTs. NFTs are going
to. You think that's going to trigger it?
It's going to crash.
Okay.
Yeah. Well, what's funny is everything's so interconnected now. It's like if one market goes down a bunch, I feel like it pulls all down a lot of other things. It's interesting how it works.
So what do you think is the first metric that usually goes and then the rest follows? I mean, the stock market's pretty front of the line. Like it kind of goes, it's one of the first few things that goes. What's another one that prefaces that goes quicker?
I mean, I don't know. I as silly as it might sound, I think crypto is getting big enough now where, if you see big sell-offs in crypto, maybe that just means people are moving to a risk-off stance. and they're getting a little scared about something.
That's fair. That's fair.
Yeah.
I would almost think crypto would go up during times of instability, that people might want to put money away, something separate.
I don't think it will. I think crypto is the first place that people flee, and they're like, "Oh my God, get out, sell."
Yeah, crypto, then growth stocks, super high flyers, and then you kind of go from there. And I feel like real estate's the last thing to go.
Yeah. What's your opinion, Kevin? What's one of the first few things that goes?
I think it just depends what started it. Like in 2018, we had this flash crash in real estate because interest rates got jacked up so aggressively that treasuries shot up in the summer. And we literally saw real estate prices go from, basically they fell 12% in a matter of 60 days. And as a real estate agent, I saw that happen as it was happening. And I have vivid memories because it was so crazy. Like it was euphoria. Like in April, I took 7 listings in 1 week, and I'm like, oh my gosh, we're cranking this. We're just like printing money basically on deals. Well, like in May, the market starts crashing in real estate. Like nobody's buying. I'm listing these properties at where I think is totally market price, and I'm usually very good with my pricing. Like multiple offers. Like we want to get multiple offers because it helps bid us up. And it's a deal too, because people don't want to cancel a deal that they got against multiple offers, psychological thing. But anyway, so none of them, like I put them all on the market, none of them sold. And I'm like, oh my God, something's going weird. And it was literally that interest rates went up to like 5% for a short period of time, and people's buying power dropped. And so instantly real estate values, you just see them plummet. And the stock market, it took another 4 or 5 months to react to these interest rates. So in a weird way, it's like, yeah, I mean, I like to think that crypto is going to go first and then stocks and then real estate. But 2008 kind of, well, not 2000, well, actually maybe 2008 as well. But 2008 was a disaster. 2018, more recently, real estate had sort of that big front running shot when it came to rates. So who knows? Maybe that can happen again.
But didn't the stock market fall in March?
Sorry.
Didn't the stock market fall in March though? Like a crazy drop?
It started in February. Oh, you're talking about in 2018 or this in 2020?
Sorry, 18, yeah.
Okay, 18, got it.
Yeah, 18, I thought some of that was due to the SALT cap. Because I think I remember that being around the tax time. Wasn't that due to the SALT cap of 10K?
I mean, maybe. I know we lost Andre here for a second, so I'm just going to remove Andre just for 1 second. There, Andre's back. Okay. Yeah, I mean, maybe, but look, there's no questioning when all of a sudden your purchasing power evaporates because the rate is so high. Like that's going to have a nasty impact. And I mean, who knows like what the next thing is going to be? Sure. I mean, like they could do a financial transactions tax on all stocks, and all of a sudden volatility could go to volume could go to crap because people are holding more, and that could crash the market. It could literally be politics that does the next thing.
See, that's something I could see happening. Is there some sort of tax that gets implemented on this to help fund whatever they want to fund? I could see that.
Checks.
What?
Stim checks.
Yeah. But then Kevin, then that helps you, because then you think of all the content then you could make. That's another 4 months
giving away more stimmy.
So you actually are the winner in this.
Yeah, and Kevin only buys stocks now, so he'll help the whole stock market go up too. So it's he provides.
Look, I have to say, I back in November, I visited Marco from Whiteboard Finance, great guy. Visited him, and we had a debate on his channel about like when's the market going to crash next, and I'm like, I don't see it. Like rates are low, rates are going to stay low. We're in this deflationary environment. There's nothing that indicates a crash anytime soon. And so my thing was, I'm just going to keep plowing money into investing. I'm not going to stop buying. Now, Marco, whether it was the magic 8 ball or what, said no, there's a crash coming, and then we get the pandemic, which like you can't predict that, and the market crashed, and I'm like, damn. But in a weird way, and I don't know what he did. Obviously, maybe he could speak to this. It'd be cool. But because I was investing so heavily before, and I'm like, I don't know. I just don't think there's like crash is coming. When this bizarro crash came in March from the pandemic, I still believed, no, I just got to keep putting money into this market. And so that's why I was just plowing money into the market. So in a weird way, this like, I don't even really care what happens. I just want to keep putting as much freaking money into this market as possible.
Andre's tinfoil
and it's dangerous because
right.
I keep going into margin. And so I got to like leash myself. But I don't know. Am I losing my mind, or what do you guys think?
I wouldn't do the margin. I get worried about margin. I think you do just fine without the margin. That's what I would think. If you just invested without the margin and whatever's like, you would, no worries in the world. I think that peace of mind goes a long way.
What if I don't like peace?
What if I don't have a mind?
No. I mean, sometimes I really feel like I sit here and sometimes I think to myself like, oh, that's just too good of a deal to pass up. Like this it's literally just happened. My Chase banker calls me. They're like, hey, we could give you an increase on your credit line. And I'm like, I just paid off a good chunk of margin. I'm like, I'm happy with margin. But then I get this call like, hey, we can increase your credit line. So I'm thinking to myself, okay, like, why not? Who knows? Like you can always use it. Like just in case as a rainy day fund, I'll just take the money. And then as soon as the credit line was available, like literally within 4 days of the credit line being available, I'm like, another big chunk of money available on credit line. Oh, opportunity. Spend it all. I'm like, what's wrong with me? I can't I can't stop.
You're a
Will,
kid
what's
at
the
a
worst
candy
thing that
shop
could happen?
now.
You get margin called and you lose how much money?
I guess it depends how much you fall.
Well, let's say 50%.
Yeah, I don't know. I mean, let's say Tesla sold off 50%. I should be okay. I should be able to with 20-25% margin. I should be okay. I have maybe, I mean, relative to the margin I have, it's a fraction, but I've got maybe 300K that I could pull from some credit lines, and I would use that as a buffer to kind of put the cash in there in the meantime to cover a margin call. Worst case, I'd have to sell some piggy bank stocks like an Apple or an Amazon or something like that. I don't want to sell at the bottom, but yeah, I mean, like if Tesla went bankrupt, that could really hurt.
To Elon texts tomorrow or tweets Tesla going bankrupt. Kevin's like, no.
If that happened, I could lose probably. I mean, if Tesla's 50% of my holdings, because of margin, it would probably wipe out 90% of what I got if Tesla just went BK tomorrow.
Oh my gosh, no way.
In stocks, right? Yeah. I still have a real estate portfolio.
No, Kevin, do you think you would be playing this fearless though if you were not on YouTube and you were only doing real estate like you used to? Do you think you would still be playing this fearless right now?
No. Like my vision is like really what I'm doing with the margin is I'm just pulling my future spend forward to now. So like if I'm like, okay, well, if I can make X dollars in the next 6 months, let's just spend that now. And then it's invested 6 months sooner.
So you're just taking it 6 months at a time.
Yeah.
Okay.
That makes sense. Yeah. You have the income. Yeah.
What are you paying for margin rates? 3 or 4?
The JP Morgan margin rate, which is almost where all of it is 1.49%.
Did you have to negotiate that, or is that standard?
Jeremy's reaction.
No negotiation.
Is that that's the private bank though, right?
It's like LIBOR or whatever. Yeah, I'll pull it up.
This video is not sponsored by JP Morgan, but it should be.
Switching everything to Chase in the morning.
Yeah, no. But Jeremy, this is different than Chase. This is JP Morgan private bank. You got to move $10 million over to get these rates.
No way. 10 mil?
10.
Jeez. Oh, so yeah. I'm gonna Google it. Later. I'm just gonna type it in my phone.
I have to say, so I had this like 2 or 3 years ago through just a connection to the private bank, and I have to say it was one of the best experiences I've ever had with the bank. Getting mortgages, Kevin would know. You literally call them up hey, I want to get a loan on this property. Okay, 15%. All right, you're good to go. We're going to call you if we have any issues. We'll send out an appraisal. But if you don't hear from us, it's good. And just
This
you got
one, right?
how easy it is.
JP Morgan Private Bank. I don't know if
Yeah.
you can see that. That's the one, right?
Yeah.
Okay.
Yeah.
It is the bank of banks, the best.
Do you still have it?
What's up?
Do you still have it? Oh, you still have the 1.5 rate?
Me?
No, I'm asking Graham. Do you still have access to the?
I don't use mine. I've used them for mortgages and for banking.
Right, but do you still have them for mortgages?
Yes.
Oh, okay.
Yeah.
What's your hookup?
$1 million.
I mean, their mortgage rates are obviously competitive on the market. You're not getting the mortgage rates of this. But honestly, Graham, I mean, like, if you're paying, in theory, if you got a mortgage 4%, or it's probably like 2.9% or whatever. In theory, you could cut your interest rate in half by just paying it off with your margin line of credit.
What are the terms on the margin line? Because that's going to go up over time. It's not going to be locked in for 30 years.
It's based. No, of course not. Yeah. It's interest only. And it's based on whatever the Fed's discount rate is, because there's a spread between that and like LIBOR. And so as the Fed increases rates, that's going to go up.
Right.
I would rather take 2.8 for 30 years than 1.5 interest only for 5.
2 or 3, yeah.
Yeah, that's fair.
It is tempting though to use margin to pay off the taxes. It's just the mentality for me is just I hate seeing that like amount owed when I know I could just pay it off. And it's
It
just
does not sound tempting at all to me.
What?
It does not sound tempting at all to me. It sounds terrifying.
It sounds really tempting to me.
Sounds terrifying.
I would say
We're going all in, baby. 1.4. Are you kidding me?
it's tempting to me because I think with
Hold on,
Schwab
gotta take a quick
they
little
were
break.
offering me, I think it's like one.
Sorry, quick little break. Let's jump right back into this.
1.7 for it's with a pledged asset line, but it's just why it's mathematically I think it would probably be better, but I don't know where interest rates are going to be 5 years from now, and I want to play the game long term. So if I had it locked in for 10 years, 15 years, it would be a no-brainer. But in the short term, I would feel terrible if I threw the money in the market, it went down, and then I'm still paying this interest rate when I could just pay it off and be done with it.
Right.
I mean, it's true. Yeah, it's a good point. The struggles.
I'm tempted. You got me tempted, Kevin. 1.4. Oh my gosh, man. See,
I'm sorry, man. I don't. Here, I mean, look, just so you know, it's not clickbait. I'll show you really quick here. It's worth seeing because it really is unbelievable. Okay, let me see if I can do this. Okay, so if I do this and then I press this and then I press this, there you go. So this is one variable LIBOR rate, $5.6 million, 1.52%. So it's actually a little less than I thought. And then I have a choice when I draw money. I could choose which one I want to use. So I could go right here, and this one's 1.53%. So sometimes this one's lower and I pull money here, but most of the time this one's lower, and it's by like 0.01%. So it's like ridiculous. But yeah,
How often do those recalculate?
I mean, it's a daily rate.
Oh, it's a daily. Okay.
Yeah.
I mean, as long as it stays anywhere remotely around there, it's just so dang low. That's crazy.
What does it fluctuate by, Kevin? Like, what's the percentage?
Oh, I've never seen it go out of the 1.5 range. So it's always been right. Yeah, it's crazy. Yeah, and somebody in the comments here, they're like, "Oh, I get 2% on M1 Finance." Honestly, M1 Finance, not a bad idea. Yeah. In fact, this morning, just because of the crash that was happening, I quickly pulled every dime of margin I have available from M1 Finance and just moved it over to cash, just in case this market was going to keep selling off. So that way I had like that line drawn at the highest possible point, basically, which is a little more risky, but they only let you take out 30% margin. So I'm like, okay, cool. So I got some extra cushion there just in case,
That's mind-blowing to me, man. I can't imagine taking out like that much margin, just keeping it there. But you know what? I'm less open to risk like that. just in case.
Fidelity needs to get it together, dude. I think, on my margin, I think they want like 4%. And I'm in like the best bracket, or 3.5% or 4%. They need to get it together, man. I'm hearing about this on 2%, 1.5%.
I want to ask you guys about this. What you just said about Fidelity kind of makes me think about the legacy automakers like the Ford and the GMs. Like, how are they going to compete with the Teslas of the world, or maybe even the Lucids of the world? How do they have a chance? Like, why is Fidelity not, doing like 3 free stocks if you come join Fidelity? Like, it's like they're not even trying to go after the millennial audience or the retail buyer who's that new investor today. They're looking at all the traditional means. I've never seen somebody pitch Fidelity as like an affiliate. Like, does this carry over to? It's just like, is this the new guard coming in, or all these old legacy companies just?
Well, yeah. I mean, in Fidelity's case, I think, one, they have so many different products to, that kind of support the business. But two, I think it's customer service. That's why I don't leave Fidelity. You know what I mean? Like, why am I not switching from Fidelity to some other brokerage? It's just a customer service has always been like, I've been with them for 12, 13 years, and their customer service is just like, you can't really compare it against obviously a Robinhood or these other guys, What's that?
Like, what do you ask them for?
Well, like, anytime I've ever had an issue or needed to talk to them about something, I can call them up. It doesn't matter what time it is, and they're right there. Yeah. So I think, I don't think I can get that customer service at Robinhood, or, I don't even think they have a phone number, right? And so when you just have like been with somebody for a long time and like they're always there for you and you have nothing bad you can say, it's hard to like break away from that and be like, okay, let me go over to Robinhood or Webull or whoever. But I will say the margin thing, that could be the difference maker that gets me to go somewhere else, maybe.
Yeah, I think like the Vanguards of the world will stick around just because they have their own value proposition that they've locked in, whatever it is. But I don't know. Fidelity over a long term, I don't know. I don't see them sticking around. Once Robinhood, Webull, once they close the gaps with their customer service or their margins or whatever it is, if those guys don't evolve, I don't see them staying around.
But Fidelity is a great product, though, a good service, and like Jeremy said, you don't see any complaints about Fidelity.
Right. Ever. I don't use Fidelity. I don't have them.
Yeah. I used every brokerage out there, and I have to say Fidelity's up there for sure.
Yeah. Do you like it better than Charles Schwab, or do you like Fidelity?
I would say I like it on par. I just started with Schwab first before I got my Fidelity account. Mm-hmm. So it's just because I have more money in Schwab right now. That's the only reason.
That's fair.
Any of you guys doing 401s? 401ks?
Should be, but I'm not.
I'm not. I just think taxes are going up in the future, and I'm planning for that.
Yeah. No. What about you, Kevin?
Yeah, I used to be really gung-ho on them, and I've kind of shifted a little bit just because of the insane restrictions that you kind of get in terms of like, okay, well, in the future, I'm going to have to pay ordinary income taxes on this money when I got to pay taxes on this. Well, what if I'm 60 and I'm still making YouTube videos? I may as well have had control of the money more freely to be able to do whatever I want with it. So part of me, I've gotten a lot more like, I'm just going to pay the taxes, screw the 401. Like there were too many downsides. The more I was looking into like, the longevity purposes of it. Like the deductions were really nice my first few years when I was doing real estate, like, yay, save some taxes. Once you get larger amounts in, it's like, what am I going to do with it in the future? The Roth I think is great, but the other ones, I don't know. They all have a flaw. It's like the IRS knows how to screw you. And then there's no, like if you had a 401k, like a big 401k, I heard this. I got to confirm this. Maybe somebody in comments confirm this. But I hear if you get hit by a bus and you got a lot of your money, a lot of your wealth in a 401k, there's no stepped up tax basis for your children. And I'm like, what is that?
Really?
Yeah.
In which one?
Yeah. Want to get rid of the stepped up tax basis. So that's interesting.
Yeah, that's kind of on the line. Yeah, that's true. Do you have a mega backdoor, Roth?
No, that's something I've been looking into, but then I shut down.
Yeah, me too. I got one. I got registered for one, but now I have to transfer money to it. But for anybody who's not familiar, I totally forget the whole spiel about it. It's like a supercharged. Yeah, except the limitation's not like $6,500, but it was like 52,000 per year, which is crazy. So I mean that's definitely worth looking into for sure.
That is.
Since it's about to be tax season, Graham, you know some interesting stuff about taxes. Hit us with some things here for a moment about that maybe some people don't know about taxes, man. I know you know some crazy stuff. You've told me some stuff before that's just like wild and blows my mind.
I think we were talking about cost segregation analysis with real estate. I think that was.
Tell us about that if you don't mind. That's crazy.
Been doing that. I haven't done it. I depreciate the properties on just a normal basis. Just Kevin has done cost segregation, I think, on all of your rentals, right? I looked into it, and in my situation, it didn't quite make sense for the cost, but Kevin has been doing a lot of that.
Spill the beans.
Basically, so this works if you have either high cash flowing real estate or you are a real estate professional, like you're a real estate broker or you're like a property flipper, property developer, or whatever. You basically can write off. Like I could buy a $400,000 house, probably take $125,000 tax deduction, cost segregating the thing, which is insane. And I could use that to not only offset the cash flow of the property the first year, but also offset some of my income from other sources, say YouTube, for example. That does create issues though, for if you want to go sell in the future, you can't like exchange that portion you cost segregated. You have less depreciation than for future years. You're kind of front loading a little bit. I mean, the IRS gets you one way or another, but yeah, there's some definitely some sweet ways you could reduce your tax bill.
How does it work when you go to sell? How does it work like when you sell that property and you took out the segregation costs out? So does that lower the value of the house when you sell, or like how does that work?
It does nothing for the actual value of the property, but for tax purposes, let's say I was going to sell one rental and buy another. I'm not able to take that portion that I segregated out, that $125K, and transfer that basis over. So technically I'd have to pay taxes on that $125K or whatever. But if I just cost segregate the next property, then I offset that as long as you keep going into real estate.
Oh, interesting. It's like stair step. That's cool.
Yeah, exactly. I don't really have big plans of selling real estate in the future. Like I like just continuously acquiring these things, and we manage them and we just kind of keep them. They're just like little piggy banks.
Actually, one of the interesting things I talked with Graham on his podcast was like, do you have any plans in the future of leveraging the resources that you've kind of accumulated right now, however much your net worth is, maybe in the future, and leveraging it to do something with it more than just like, let me make more of it. Like whether that's charitable causes, it doesn't have to be like altruistic donations or anything like that, but like, building a school or like whatever it is. Sure. Are there any plans in the future for you?
Yeah, I mean, I'd love to be part of, and I don't know if politics is the way with funding or whatever, but I'd love to be part of the solution that solves poverty, and that takes a lot of money. So that to me is like, how can I get to a point of having so much net worth that I could actually even have a meaningful impact on that fight? Because I just think poverty, look, if you're in poverty, you're 2.5 times as likely to be a victim of violent crime. In my opinion, most crime problems are a result of poverty. So poverty is toxic, especially childhood poverty. Like, I mean, I thought I had a rough time going through my parents divorcing, and like, my dad almost going into foreclosure on our house at one point after all these lawyer fees and whatever. Like, that's crappy. But imagine just, I mean, and we were pretty poor at some points too, but we still had a car, we still had food. But I can't even imagine the people who are going hungry, the children who don't have enough to eat, like especially children. That makes me feel like crap, So childhood poverty, that's a big thing for me.
That's cool. That's really cool.
Yeah, Kevin, you would do well in politics. Before we wind this up, I think if you got into politics and really started changing policies.
Kevin for president.
I'd vote for you, man.
Well, I mean, thanks for that. I mean,
could you run for president, or were you born here?
I probably can't. Well, I know I can't actually because of the.
You weren't born here.
I wasn't born here, which I honestly think is a stupid rule. It's like, come on, like here since I'm 1 year old, am I really that different? What?
That's why I'm not president. Is really why.
you would be.
That's right.
But Graham and I have touched on this, and the problem is, as soon as you get into politics, you have two issues. One, the big one Graham and I talked about is you have to pick a side. Mm-hmm. That's horrible, first of all. The second problem is they have so many, I'm sure, and I haven't really looked into this, but I know there are these divestiture, I can't even say that right, divestiture rules, whatever, that basically now I probably have less capability to go make money buying stocks and real estate because now I'm a politician. And what? To get a $180,000 salary or whatever? Like, you know, and how much change am I actually going to be able to make? The whole system's effed up.
Yeah. Right. I mean, you might be able to have more change behind a camera, making YouTube videos, talking.
I think so, for sure. Yeah. And we need you here on YouTube, man. Don't leave.
Yeah.
Speaking of, we've been here for almost 2 hours.
I know.
Oh, wow. Yeah,
we need to like have a segment to end the show on. I feel like a quick
so that's it, you guys. Thank you so much for watching. Really appreciate it. Make sure to smash the like button, subscribe. For all the people watching this right now who haven't already subscribed, make sure to smash the subscribe button. Totally free. We don't even have ads on this channel yet, so if you subscribe right now, you're getting in before any
grandfathered in.
Free. So now you can say you subscribe before the ads.
And we post every Tuesday at 6 p.m. Pacific, so come back for a new video.
That's it.
If you guys would have told me we didn't have ads on this, I wouldn't even have done this. It's ridiculous.
It's a waste of time.
Guys, make sure to subscribe. There are too many people watching right now to not subscribe. You just take a quick second, just give it a little tap, and then you'll see us next week, 6 p.m. Pacific Standard Time.
I have to say, Jeremy, I looked at, I don't know which video it was, but you posted a video yesterday and somebody was like, man, 4 ads. It was like a 17-minute video. So I'm like, 4 ads, that's normal. But anyway, somebody was complaining about it. And you replied and you're like, come on, man. It was a big red day. I need the help. And because today you should probably put like 8 ads in.
You should.
On the green days, no ads. It's just full, just monetization.
Oh gosh, that's the truth.
As Kevin lost a lot of money.
Yeah, rough day. Oh, it happened. Oh, guys. Well, hey, it's been fun. Thank you so much for being here. Jeremy, Andre, Graham, maybe stick around for just one more second. I'm going to hit end broadcast on this. Thank you all so much for being here, and goodbye.
See ya.
One moment. So, they've been Millennial Money, Episode 2, The Market Crash. I'm Zoomers React. I'm going to be posting this right after I'm done recording and jumping right into the next few episodes. Leave a like, comment down below, and smash that like button, please. Alright. Love y'all. Later.